What's up, everybody? Welcome back to my channel, Mortgages with Mike D. If you're new to the channel, I'm a licensed mortgage advisor, and the goal at the channel is to really help current homeowners and future home buyers better understand the ins and outs of what can sometimes be the complicated mortgage process. Also, for everyone watching, I really just want to make sure that you're better informed so that way you can make better decisions when it comes to mortgages. In today's video, we're going to be discussing the top reasons for a mortgage refinance. And by the end of the video, you'll have a better idea and understanding why and when can be a good time to consider a refinance. So it's no secret that in 2020 and 2021, a large majority of mortgage applications were dedicated to refinances. And that's because we saw historic all-time low interest rates, which caused a flood of homeowners at least considering the possibility of refinancing. Obviously, one of the main reasons why one would consider a refinance is to capture a lower interest rate versus what they currently have on their existing mortgage. Although that's an extremely popular reason to refinance, there's actually a variety of other scenarios why refinancing your existing mortgage can make a lot of sense personally and financially. But before we dive into those reasons that we're going to discuss, I want to preface it by saying, whenever you're thinking about exploring a refinance, it's important to have an in-depth conversation with your mortgage advisor because you want to not only understand all of your options and compare pros and cons, but there's going to be questions that you're going to want to have answered, and your mortgage advisor should be asking questions too, because in order to give you an informed analysis, they're going to have to better understand what your future plans are, what your current plans are. How long do you anticipate living in the current home, or at least how long do you think that you'll have that home for? Because maybe you're going to be moving out in the foreseeable future, but you might hold the property and rent it out, or you might hold it as a second home. Whatever the case may be, there's important questions to be answered. That way you have all of your ducks in a row so you can actually evaluate if a refinance makes sense, or maybe if one makes more sense than the other. So reason number one, obviously what we just touched on, is lowering your existing interest rate. And this type of refinance is known as a rate and term refinance because you're adjusting or changing the rate and term. And obviously you would want to do this because you're going to be able to most likely save a lot of money on a monthly basis, which is going to alleviate some stress for you, right? Because now that you have more monthly cash flow, because now you're saving money on which is probably your biggest expense, you can now save at a higher rate, which is going to help you accomplish whatever goals that you might have. Not to mention, as I was saying before, with the interest rates, well, when they were at historic lows, it was giving you the best opportunity to save as much money as possible on a monthly basis, but also which is going to lead to potentially thousands, if not tens of thousands of dollars over the life of the loan, or at least as long as you hold that loan for. Reason number two, maybe you want to go from an adjustable rate mortgage, also known as an ARM, to a fixed rate mortgage. Now, why would you want to do that? Well, as we were just discussing, interest rates are at all-time lows. So if you had not only a higher interest rate on your current mortgage, but also one that's adjusting every year or every 6 months, whatever the structure of it is, why wouldn't you lock in an historic low interest rate forever? So it's never going to change. You don't have to worry about it adjusting, your payments fluctuating. You can now lock in not only a lower payment immediately, but it's never going to change. So your savings can be even more significant, right? And what we're seeing now is interest rates go up. So you're really excited if you were able to go from an adjustable rate mortgage to a fixed rate mortgage. You just have that security and safety now because your payment's never going to change. Reason number 3, maybe you want to shorten and lessen your overall term on your existing mortgage. So maybe you purchased on a standard, 30-year fixed rate mortgage and you're a couple years into it, but now interest rates have considerably dropped. So this is when you're kind of weighing pros and cons of different options. You can elect to do another 30-year fix, but maybe you want to do a 20-year or a 15-year. Now, yes, the obvious question is, well, won't my payment go up? Most likely it will, because you're now paying that debt off in a much shorter time frame. So to do so, you're gonna have to pay more every month, right? But over the long haul, you're likely going to save a considerable amount of money in interest or cash flow comparing a 30-year to a 15, or even 20-year. It could make sense because maybe now you're making more money, or maybe a big goal of yours is just to be debt free. You could be in that point in your life where you want to start knocking out all of your debt, and a mortgage is one of those things that you want to have fulfilled and satisfied. This can be a very advantageous reason because, like I said, you're going to save money and you're also going to be subject to lower interest rates. So it's another kind of reason if paying off your debt or paying less interest over your lifespan or over the lifespan of the loan, this can be a great option for you. Reason number 4, consolidating debt. This is known as a cash out refinance because you're accessing the equity in your home to consolidate that bad debt. And an example would be, let's say you have a lot of high interest credit card debt. Maybe there's some personal loans. I mean, the list can go on and on. This form of a cash out refinance can make a ton of sense. For instance, you might be making the minimum monthly payments on that high interest debt, and you just don't see the light at the end of the tunnel. You're drowning, can't keep your head above water, and it's just flat out stressful. So by fixing all of that bad debt into one monthly payment through your mortgage, it's not going to be in a fixed lower interest rate, right? It's going to be much lower than that crazy credit card debt interest that you were paying. So not only can you probably save a significant amount of money on a monthly basis, giving you much more breathing room, but if you continued on making those minimum payments on that bad debt, the reality of it is the number or the cost in interest was just going to be astronomical, and you're going to end up saving thousands, and again, if not tens of thousands of dollars over the life of your new mortgage loan. Reason number 5 is home improvements and investments. So I kind of lumped this in together. So this is also a cash out refinance. So again, you're accessing the equity in your house to do home improvements. One reason you would do home improvements is because it's going to most likely improve the value of your home, maybe immediately, if not in the future. Another reason you'll want to do home improvements because maybe you foresee yourself living in this house for the rest of your life. It's your forever home, and you now want to make that home your dream home. So now you can take that equity in the home to do whatever it is that you want to do to make it the ideal home for you and your family. And in terms of investments, you can tap into that equity to fund future real estate investments, or maybe you have other business ventures or opportunities and getting access to capital just is difficult. One avenue or option could be accessing the equity in your home. So before we move on, quick note about cash out refinancing, because as we're seeing home values rapidly rise at historic paces, it can be attractive to explore a cash out refinance because now you have all this built up equity, it seems like almost overnight. So one disclaimer that I feel like I have to make is it's probably not a good idea to just tap into your equity just for the sake of it, right? So don't do this if you don't really have any plans or goals in mind, or if you're just going to go buy a bunch of materialistic items like clothing, cars, so on and so forth. Not to say that they're bad things to buy. It's just probably not the best use when doing this. So the point is there's other benefits or things that make more financial sense where you can deploy this equity rather than just for personal consumption. So reason number 6, and it might not be like a primary reason to refinance, but maybe you have the opportunity to now remove your private mortgage insurance, also known as PMI. So like I said, it might not be like your driving reason to do it, and it probably wouldn't be worth it if that's your driving reason, but it can be just a benefit or a bonus, right? So a lot of people that were able to lower their interest rate through a rate and term refinance, if they were already paying private mortgage insurance, it was also likely with real estate values skyrocketing that not only were they lowering their interest rate, but they were also benefiting from their home value improving. So now they were able to remove their private mortgage insurance. So it was kind of a win-win. They were saving money through lowering their interest rate, and they were saving even more money by completely removing or potentially just reducing their private mortgage insurance. So yeah, it might not be the sole reason you consider a refinance, but it can certainly be an added bonus to a refinance. Another reason is maybe you want to refinance out of an FHA loan into a conventional loan. Again, it might not be the most popular reason, but it can be a useful one. For instance, with FHA loans, without going into too much detail, in most cases, you're required to pay mortgage insurance for the life of the loan. So if you have a 30-year mortgage, you're going to be paying that mortgage insurance over 30 years. Now that might sound scary. It's not as bad, as you think, but let's say that mortgage insurance, is a pretty high number. You can explore a conventional refinance when interest rates go down, and you might see a pretty sizable savings. So maybe you do lower your interest rate, and maybe you also get rid of that private mortgage insurance completely. It can be a significant savings on a monthly basis, and it also can be a substantial savings over the life of the loan. So it's another reason to consider, but again, always weigh the pros and cons to see if it makes sense. So the final reason you might want to refinance is maybe you need to remove someone from the existing loan. Now, most common is because it's due to a divorce, a separation, and someone needs to be removed from the loan. Well, that can be done via a refinance. So as you can see, there are a multitude of reasons why a refinance could be beneficial or necessary. And again, I just want to make it clear, it's very important to work with a knowledgeable mortgage advisor. You want someone that's going to hold your hand and navigate you through this process and weigh out all your options. Maybe there are multiple scenarios that could make sense. You want them to say, hey, here's options A, B, and C, or options A and B. Here are the pros and cons of each one. And they can give you their opinion, but ultimately it's your decision. So you really want that expert helping you, or at least guide you when it comes to making that smart and informed financial decision. So I hope you enjoyed today's video. Please don't forget to like and subscribe, and we'll see you on the next one.